In this video clip, I'm going to look at how the intergroup transaction for a sale of a non-current asset to inventory in a prior period, how the consolidation adjustment for that affects our NCI calculation. Now, first of all, the sale of the non-current asset to inventory happened in the previous period, in the previous financial year. So therefore, we have to adjust our opening retained earnings with the unrealized profit that sits in the opening inventory. So that sat in the closing inventory for the previous financial period. The inventory, we assume, realizes within the operating cycle of the company. So it normally will realize in the following year. Therefore, we won't have to adjust against inventory, but we have to adjust the group cost of sales to bring it in line with the original cost of the inventory from a group perspective and the tax effect on that adjustment. As you can see, two different parts of equity is affected by the intergroup transaction. First of all, our opening retained earnings is affected. So there's a decrease in our opening retained earnings. So if our equity balance decreases, then there should be a corresponding decrease in NCI in proportion to their shareholding equity. So that would be our first entry. Debit, we want to decrease our NCI, so debit NCI, credit opening retained earnings. The second entry relates to the NCI adjustment for the increase in equity as a result of the realization of that profit when the inventory was sold to an external party. So the effect of our cost of sales and income tax expense adjustments will be that on a group level, the earnings for the year will increase, so there's an increase in equity. Therefore, the NCI has to move in line and an increase in the NCI proportionally to their shareholding. So the entry will be debit the profit. So we extract it from the profit and we allocate it to the NCI equity account so that it increases with that increase in equity. The net effect of these two entries is that there won't be any movement in our NCI balance. So the NCI adjustment that we need is to debit the NCI share of profit and credit the opening retained earnings.